We got some massive news for Apple stock and Alphabet stock investors as Berkshire Hathaway on Friday revealed a $4.3 billion stake in Google parent Alphabet. And it also said that it further reduced its stake in Apple, detailing its equity portfolio for the last time before Warren Buffett ends his 60-year run as chief executive. And these are along the lines of the sentiments at Berkshire Hathaway all year long, where it's been selling Apple shares and divesting away from its large holdings of Apple stock. And I've been talking about all year long how I felt that Apple stock was an unattractive stock this year. To start 2025, I told investors that Apple stock was not a buy. I think it's the only year where I had Apple stock rated as not a buy, whereas I've had Alphabet stock rated as a buy all year long. So I'm going to share with you the details of these announcements and what it could mean for investors.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So in a filing with the U.S. Securities and Exchange Commission, Berkshire said it owned 17.85 million Alphabet shares as of September 30th. Berkshire lowered its Apple stake to 238 million shares from 280 million shares in the prior quarter, and it's now sold nearly 3/4 of the 905 million shares it once had. And, this goes along, and I'm glad Warren Buffett is finally coming along to my recommendations. The legendary investor from Omaha, of course, he knows much better than I do on what stocks are a good value. But I always like to see when investors like Warren Buffett are following along the lines of the conclusions that I came to. And of course, if you've been watching my videos, I do my own research and conduct my own analysis. Oftentimes, I come to conclusions before anyone else does. Early this year, I rated Uber as the best stock to buy. And then shortly after I made that conclusion, I believe it was a month or two after, legendary investor Bill Ackman came out and said how he thought Uber was an excellent investment and added billions of dollars of Uber to his portfolio. So I like to see that. It's just confirmation that my analysis and process is leading to conclusions that other more successful investors are also coming to, even though they're coming to that conclusion a little bit later than I'm coming to. Of course, they are managing larger portfolios. Their decision making has broader, more important consequences. So it's understandable they take more time to come to these conclusions and accumulate their shares before they come out and tell everyone that it's a buy or they're bullish or this statement comes out. Because if Warren Buffett was to come out and say he thought Alphabet stock was a great investment before he started accumulating all the shares, the stock price of Alphabet will go up by a large amount before he finishes buying up the shares, so he'll have to pay a higher price. Whereas if I say I think Alphabet stock is a great buy, I'm not moving the needle. Me and my 400,000 subscribers are not moving the needle in Alphabet stock. But if Warren Buffett comes out and says Alphabet stock is a buy, it might go up by 5% just on the day of the announcement, or 10% even, moving the stock by $100 or $200 billion. That's the magnitude of the influence that Warren Buffett still holds on stock markets worldwide. And, part of the reason why I've liked Alphabet stock all year, in fact, I've had Alphabet stock rated as one of the best stocks to buy all year. And only yesterday or the day before did I bring it off that list of best stocks to buy. I still think it's a buy, but I just downgraded it from my list of best stocks to buy because the price had gone up by so much already in 2025. So I'm really happy with this performance. I've also owned Alphabet stock since 2020. And if you look at the valuation discrepancy, Apple's trading at a forward PE of 33 and Alphabet trading at a forward PE of 26, while Alphabet is growing its revenue near 3 times the rate of Apple, and Alphabet has arguably more successfully invested in artificial intelligence. And you can argue that's one of the reasons why Alphabet stock is trading more cheaply is because it's spending so much money on AI, whereas investors are in a way rewarding Apple. It's trading near its 52-week high, rewarding Apple for resisting the temptation of spending on artificial intelligence. It's been largely absent from these AI investments. It made some partnerships with OpenAI and Alphabet, but it hasn't been making its own huge announcements of tens of billions or hundreds of billions of dollars as these other large cap tech companies have. And so investors have rewarded Apple for avoiding that temptation. Now, if you look ahead 10 years, we might look back and say this was Apple's big mistake and why it got left behind. Everyone else moved ahead and Apple failed to invest and it got left behind. Or we can look ahead 10 years from now and say, man, Apple was a genius for not investing in AI. It's become a huge failure. Everyone else in the large tech competitive industry has struggled as a result, and Apple has maintained its profitability as a result of resisting that temptation. That remains to be seen looking ahead, but I think more likely than not, the investments in AI are going to pay off. The early indications I'm seeing, and it could be one of the reasons why Berkshire is divesting away from Apple because of its failure to innovate in any meaningful way, right? Every year, the iPhone is only incrementally better, right? Just a little bit better camera, a little bit better battery life, a little bit better display, but no real big steps forward. And I think that's disappointed a lot of consumers, but not so much investors, because investors like that you can generate more cash by only making incremental improvements because you can make more advancements in manufacturing and lowering your manufacturing cost and thereby improving better profits. As you've seen from Tesla, right? They've been pretty much producing the same form factor since 2020, the Model Y and the Model 3, making, only incremental changes on their updates and refresh, but they're able to produce pretty much the same type of vehicle and thereby improve the manufacturing process and generate better profitability than nearly every other electric vehicle maker outside of China. And so there's a give and take there, but big news for Apple stock and Alphabet stock investors as Berkshire Hathaway reveals its stake in Alphabet and continues to divest from Apple, a strategy and a trade combination that I fully agree with because that's what I've been saying all year long, how attractive I felt Alphabet stock was and how unattractive I felt Apple stock has been. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.